Akshat, thank you very much for being here today. Uh, Always a pleasure to listen to your thoughts. And I want to start by asking you to introduce a little bit more about Aditya Birla Capital, what you guys do, how active you are in the market, which asset classes you are interested in. Please give us an overview.
Lovely. We're part of the Aditya Birla Group. It's a large conglomerate in India. We are exposed across businesses, including cement. We're the largest cement manufacturer in the country. We're the largest aluminum manufacturer in the country. So Aditya Birla Capital is the financial services part arm of the group, within which in real estate, what we do is we have a non-banking finance company, we have a housing finance company, and we have a development arm as well as exposure to funds. So what the part I look after is the real estate fund business. Effectively, we invest across asset classes in real estate, uh, across the capital stack. So from high yield, debt to mezz to structured equity, preferred equity. So across the capital stack, we kind of take exposures in residential real estate, commercial real estate. We are evaluating some of the new asset classes, including co-living, student living, some operational company level. So the idea of this part of the business is to evolve with the changing environment and the dynamics of real estate. So depending on where capital is required, as the country kind of goes through its stages of evolution within the sector, and at the same time give both domestic and global investors the ability to participate in that. So what we do is we structure products which make sense that the investors can take an exposure and get the returns. At the same time, these asset classes get the capital that they require.
And in such a hot market at the moment, in comparison to other markets like Europe or the US, is a very different market at the moment. Things are booming. How is the lending activity here? What's the challenge you have at your job at the moment?
I think the biggest challenge in India with respect to real estate is that it is a very segmented market, and each of the micro markets or the states, as we call them, are completely different in terms of the product mix, the psyche of the buyer. If I was to look at residential, the requirements of the players in the market, everything is different. So effectively, India is like a multiple set of individual markets clubbed into one. So the level of expertise that somebody wanting to take exposure in this markets has to be at the micro market level. So I think that is one of the biggest challenges, especially global investors have faced. Hence the segregated exposure. If you look at some of the large capital that has come in, most of it has come in either in ready yielding assets because of the development risk and the challenges around that. So I think that is something which at least the domestic players have over the years kind of learned how to navigate. Also, I think the Indian market has evolved a lot in terms of regulation, in terms of how to make it more investor friendly, the legal aspects of it in terms of insolvency, with both government support. I think the market has now reached a stage which is a lot more uh, like I said, investor friendly and closer to what the developed markets kind of look at in terms of both safety and structure when they want to put invest money. So I think we're getting there. We're on the right track. Maybe a little more time, and we should be considered amongst one of the more developed markets, especially for the sector to start attracting global capital.
And I understand that the situation currently is very positive in the market, but do you see any risk on the horizon? Anything that would worry you?
Fair enough. So real estate has always been cyclical in nature, and it will continue to be so. We've had a good run over the last 3 years since the first wave of COVID. I think it was a mix of a lot of pent up demand, as well as the previous decade was not so good for you know at least the residential side of the sector. Commercial was doing well, which you know historically in India, both residential and commercial have been inversely proportional. So commercial does well, residential doesn't. Um, the mortgage rates have moved up significantly in the last year and a half, along with prices. So I think recently there was a report in the last year across the top 10 cities. I think prices of residential prices have moved up anywhere between 7 to 20%.
Wow.
So I think both coupled together at some point are going to have a certain impact on demand, because your mortgage rates being in excess of 9% and your prices moving up, especially in the mid-income segment, will have an impact. So I do see some sort of slowdown in terms of velocity, not a slowdown itself, but this bull run that's continuing. I kind of see it tapering off at a point, purely again, like I said, because it's cyclical, continue to be cyclical. At some point, the cycle will turn.
Perfect.